Walmart is probably the broadest and most powerful company in U.S. business history.
There's never been a company like it.
25, young man, 25.
Walmart's your number one customer?
Number one customers.
Have to lead to the lowest wages and to job loss and to lower living standards.
Was the first company on the planet to report $250 billion in sales. $256 billion.
You just sold your business for $500 million, and congratulations, because you're thinking about opening a Walmart and becoming a retail mogul who controls a massive store empire, making money from everyday people buying groceries and cheap things. You're imagining yourself as the owner of a sprawling superstore with thousands of employees and millions in daily revenue rolling in from people who have nowhere else to shop. You think you'll build a Walmart, undercut all the local competition, and dominate your market while becoming insanely rich. The reality is completely different and way more fucking depressing, because owning a Walmart store is one of the worst financial decisions you can possibly make with that much money. Most Walmart store owners operate on razor-thin margins of 1 to 3%. The company squeezes suppliers relentlessly. Your employees are constantly calling out, and you're competing against a corporate giant that doesn't want independent operators succeeding. By the end of this video, you'll understand why owning a Walmart isn't an investment, and it's definitely not a path to wealth. It's actually just a way to pour $500 million into a massive building, inventory, and payroll, while Walmart corporate extracts most of your profit and leaves you struggling to break even. Let's start with the actual cost of opening a Walmart store, because it's astronomical, and most people have no idea how expensive it is. A brand new Walmart supercenter costs between $80 to $150 million just to build and stock, depending on location and size. That's just the physical building, the equipment, the shelving, the checkout systems. A smaller Walmart store costs $30 to $50 million. You've got $500 million, so theoretically you could open 3 or 4 stores. But that's not how this works at all, because Walmart doesn't franchise stores to independent operators in most markets. Walmart owns and operates its own stores. You can't just open a Walmart. You'd have to either buy existing Walmart locations from the company, which they rarely sell, or you'd have to negotiate directly with corporate to open a franchise, which almost never happens. But let's imagine you somehow negotiate with Walmart corporate to open a franchise location or buy existing locations that they're willing to sell. You're now spending enormous amounts of money just acquiring the physical asset before you've sold a single item to a single customer. You've spent $100 to $150 million just on the building and fixtures and basic infrastructure. But acquiring the store isn't the cost of operating it. It's barely the fucking beginning of your financial nightmares. The moment you open that store, the real expenses start showing up, and they're absolutely crushing you every single day. The biggest expense by far is staffing and payroll, which makes up about 30 to 40% of your operating budget, depending on store size. A Walmart supercenter employs 300 to 500 people. They work shifts around the clock. You need store managers, assistant managers, department supervisors, cashiers, stockers, overnight crew, loss prevention, all of it. Average wage is $15 to $18 per hour for most positions. Managers make $40,000 to $60,000 per year. That's roughly $5 to $6 million per year just in payroll before benefits. Add benefits and taxes, and you're spending $7 to $8 million per year just on employee compensation. But payroll is just the beginning, because you also have inventory costs, which are massive and require constant investment. A Walmart supercenter carries about 140,000 different products in the store. You need enough inventory to keep shelves stocked, but not so much that you're tying up too much capital in products that might expire or go out of style. For a supercenter, inventory investment is typically $30 to $40 million at any given time. That's capital that's sitting in products waiting to sell. When products sell, you need to buy replacements constantly. You're paying for inventory constantly without immediate return. Then there's the real estate and facility costs. If you own the building, you have property taxes, insurance, maintenance, repairs, utilities. Property taxes on a $120 million building can be $1 to $2 million per year, depending on location. Insurance on a massive retail facility with thousands of people shopping costs $500,000 to $1 million per year. Utilities to run a building that's sized 24 hours a day costs $2 to $3 million per year. Maintenance and repairs are constant because retail spaces get heavy foot traffic and wear and tear is severe. Parking lot maintenance, roof repairs, HVAC systems, all of it adds up to another $1 to $2 million per year. Shrinkage is another massive fucking expense that most people don't understand. Shrinkage is when products disappear from inventory through theft, damage, or just fucking up. Retail shrinkage typically runs 1 to 3% of sales. For a store doing $100 million in annual sales, that's $1 to $3 million in lost products per year. That's just money disappearing. Employees steal stuff. Customers shoplift. Products get damaged and have to be thrown away. That's just cost you eat. Marketing and advertising costs money. Even though Walmart does massive corporate advertising, you still need local advertising to drive foot traffic. That's another $500,000 to $1 million per year in local ads and promotions. Then there's the supplier problem, which is absolutely brutal. Walmart is the largest retailer in the world, and they have massive leverage over suppliers. They demand the lowest possible prices. They demand exclusive deals. They demand suppliers follow their specifications exactly. If you're operating a Walmart, you have to follow Walmart's supplier relationships, which means you're buying inventory at whatever price Walmart negotiates. You don't get to negotiate with suppliers directly. Walmart corporate controls that, and suppliers charge Walmart premium prices compared to what smaller retailers pay. Because Walmart is so massive, you're stuck with whatever pricing Walmart has arranged, which might be worse than what independent retailers negotiate. Now let's talk about the real problem, which is that Walmart operates on incredibly thin margins. Most retail operates on 5 to 10% gross margins. Walmart operates on 1 to 3% gross margins because their business model is based on volume. They make money by selling huge quantities at low prices. For a store doing $100 million in annual sales at 2% gross margin, you're making $2 million in gross profit. But your operating expenses before profit are probably $1.5 to $2 million per year. You're barely breaking even or slightly profitable before corporate fees and other obligations. And there's the corporate fees problem. If you are operating a Walmart franchise or store, Walmart corporate takes a percentage of your revenue for corporate support, marketing, systems, all of it. That can be 2 to 5% of revenue, which is another $2 to $5 million per year going to corporate. You're now losing money. Let's look at real examples of retail store failures to understand how fucked this is. Bed Bath & Beyond was a major retail chain with thousands of stores. The company couldn't compete with online retailers like Amazon. They couldn't make their stores profitable enough to justify the overhead. In 2023, they went bankrupt and closed hundreds of stores. Shareholders lost everything. Employees lost jobs. The company that had been operating for decades just disappeared because the retail economics didn't work. Then there's Toys R Us, which was a giant toy retailer with stores everywhere. Amazon and Walmart destroyed them with lower prices and better selection. Toys R Us couldn't compete. They went bankrupt. Thousands of stores closed. Employees lost jobs. The company that dominated toy retail for decades just vanished. Or look at Sears, which was one of the largest retailers in America. They had massive stores everywhere. But Sears didn't adapt to e-commerce. They didn't invest in online sales. Amazon came in and destroyed them. Sears went bankrupt. Stores closed. The company that had been a retailer for 100 years just died. Here's what most people don't understand about retail economics. Retail is a volume business with thin margins. You make money by selling huge quantities at low prices. The problem is that Amazon and online retailers have destroyed brick-and-mortar retail. People shop online now. Retail locations are struggling. Foot traffic is down. Sales are declining. Stores that were profitable 10 years ago are struggling now. The structural economics of retail have changed and they're not coming back. Plus, Walmart corporate is actively competing with you. If you open a Walmart store in a market, corporate might decide to open their own store next to you or nearby. Suddenly, you're competing against corporate Walmart, which has more capital, better inventory pricing, and corporate resources. You can't compete with yourself, basically. Let's do the actual math on operating a Walmart store. You open a supercenter, annual sales are $100 million. Gross profit at 2% is $2 million. Operating expenses are as follows. Payroll is $7 million. Real estate and facilities is $4 million. Marketing is $1 million. Shrinkage is $1 million. That's $13 million in expenses. You're losing $11 million per year before corporate fees and other costs. After corporate fees of 5%, you're losing $16 million per year. You're bleeding money constantly. Realistic scenario is worse. You open a store in a competitive market. There's already another Walmart nearby. Your store captures market share from the existing store, but doesn't grow the overall market. Both stores are competing for the same customers. Both stores are losing money. You're losing $15 to $20 million per year. After 3 years, you've lost $50 to $60 million. You've burned through $100 million, and your store is still losing money. You can't keep operating at these losses. You have to close the store or sell it at a massive loss. Worst case scenario is you open a store in a declining area. Foot traffic is low. Sales are 30 to 40 million per year instead of 100 million. Your gross profit is less than 1 million. Your operating expenses are still 10 million per year. You're losing 9 million per year. After 1 year, you've lost millions. After 2 years, you can't continue. You close the store, you lose your entire investment. This is why most successful Walmart stores are either owned and operated by corporate Walmart Or they're in markets where Walmart has dominated and eliminated all competition. Independent Walmart store operators don't exist really because the economics don't work for them. They can't compete with corporate Walmart. Here's the structural problem that makes owning a retail store a trap. You have massive fixed costs that don't change regardless of sales volume. You have hundreds of employees you have to pay. You have a massive building you have to maintain. You have inventory you have to purchase constantly. When sales decline, you still have all these costs. You can't cut costs fast enough to match revenue declines. You go underwater financially. The other problem is that you have zero control over pricing and suppliers. Walmart corporate controls supplier relationships and pricing strategies. You have to accept whatever they dictate. You can't negotiate better deals. You can't set your own prices if you're operating as a franchise. You're just an operator executing corporate strategy and absorbing losses when the economics don't work. Then there's the Amazon problem, which has basically destroyed retail. People shop online now. They get same-day or next-day delivery. They don't go to physical stores anymore. Foot traffic is declining. Retail locations are becoming less valuable. A store that was profitable 5 years ago might be losing money now because traffic has declined so much. The structural shift to e-commerce has destroyed the retail business model. So if you're sitting there with $500 million thinking about opening a Walmart or buying Walmart stores and becoming a retail mogul, here's what you should actually do instead. Don't do it. Invest in e-commerce companies. Invest in technology. Invest in Amazon competitors. Invest in literally anything except brick-and-mortar retail. A Walmart store will take your $500 million and burn through it, paying employees and rent and inventory costs, while you struggle to break even or lose money. The retail economics are broken. Foot traffic is declining. Online shopping is destroying physical retail. You're going to lose everything trying to compete with Amazon and corporate Walmart in a market that's fundamentally against you. The only winners in retail are the companies with massive scale and e-commerce capabilities. You're just going to get destroyed.